Good Friday morning, everyone, and welcome to the Market Day Report with our first check of the markets for the day so far. I'm John Jenkinson. Glad to have you tuned in with us this morning. We've got a lot of numbers hitting us here this morning, and a lot of those have to do with exports. On the overnight trade, though, we were anywhere from 2 to 3 pennies higher. Let's talk to Rich Nelson with Allendale Incorporated here this morning. Good morning, Rich. A lot of numbers here being thrown at the trade, and some of these export numbers look relatively positive.
Sure is right here. Now, as far as today's discussion, we're talking about both old crop and new crop sales. As a reminder, the old crop market ended officially as of August 31st. So these numbers include both old crop and new crop involved here. Corn, 1.1 million tons, within the trade's expectation for the most part. We did have some good new crop sales finally here. Soybean numbers, 1.1 million tons as well. Same type of story there. Of course, those are mostly new crop sales in this case. Soybean here, in this case, 274,000 tons. That was within the trade's expectation. Soybean oil, only 900 tons in this case. That certainly was a clear disappointment on the oil side. Looks like on the wheat end of things here, 376,000 tons. Overall considered neutral. What we'll point out, though, as far as these secondary ones here, these grain sorghum, for instance, 58,000. That was okay. Cotton seeing 159,000, and then pointing out that the rice, 44,000 overall. So most of these numbers neutral, but a lot of this was a new crop focus for today's discussion.
What about that soybean number? Will the oil offset any enthusiasm that the soybean number itself would bring?
Certainly a great point there, John, and I think a lot of people will hesitate to call the soybean oil market a raging bull. It has been doing very well here since we had that discussion regarding the Argentine and Indonesia import tariff, but probably on this one, it's just going to be a small setback here today. I don't know if it's going to stop the soybean oil market, though.
We're just slightly higher last night on the overnight trade, and we've got that report that's going to be here facing us on Tuesday. So in breaking down in percentages, in your opinion, what percentage are we technical in this soybean market, and what percentage is actually fundamental right now, do you think?
I'd say for right now, because we are kind of looking ahead towards Tuesday's supply-demand report, I think the trade's kind of disappointed that we have only a moderate discount in expectations for this yield drop coming here. So I think probably for today all the way through Monday, we can certainly argue that this will be mostly a technical trade, probably just looking at various support levels and playing within a certain range here.
All right, let's go back to the corn then. We're in the middle, or just starting to get good harvest numbers in, particularly from the south. Now we've got another hurricane that could affect parts of the southeast, which this is all going to play into that corn market at some point. Do you think that the weather could play a factor in some of the numbers that we look at next week for the corn trade?
Yeah, I think it certainly will give us something to discuss here. In terms of the actual effect, one thing to point out with this kind of changing story with the hurricane now kind of moving more northwest rather than straight along this eastern seaboard, we can maybe argue there might be some impact on some of these grain production numbers, as this system now may hit a good chunk of Tennessee, a good chunk of Kentucky, and heck, even to that southern Illinois range in the most recent run for this hurricane forecast. So perhaps we might have some more discussions about this impact actually taking off a few bushels.
Well, and some of the Midwest was really counting on parts of the southeast to make up some of the deficit for that drought area.
And that sure is a great point here. A lot of us had pointed out that a lot of this uneven rainfall, off and on heat for the western Corn Belt, certainly has caused some problems. And like you said, we were relying on these a lot of these states in the southeast region to help pull us up.
Rich Nelson, our guest with Allendale. Don't go anywhere. Rich and I will be back with analysis and a look at the livestock trade coming up next here on Market Day Report. Headed back to McHenry, Illinois right now with Rich Nelson and Allendale Incorporated. Now let's focus here on this livestock trade. Big jump yesterday for the live cattle market and, the feeder cattle market to an extent. Still no cash trade, though, really to hang our hat on.
For the most part, that's right. We still have this idea of cash cattle. Was a disappointment on Wednesday with those limited sales we saw, 103 and 163, both live and dressed. Those numbers were down from last week. As far as yesterday and leading into today, we now have this discussion of maybe 102 bids versus 106 offers, so still some arguments going on. On the positive end, we do have some extra procurement going on from the end users. They're, in fact, over the past 3 weeks, 57% larger new crop procurement. I should say extended delivery procurement here for this beef market. So some people wondering if maybe we'll find a cash low involved or not. I'm not going to make that point, especially with today's export sales numbers. Only 5,900 tons of beef were sold. In fact, that's a bit lower than last year's 9,200 in the same week. So maybe a little disappointment leading into today's session for the beef end. As far as the pork discussion, we had these export sales today, 25,700 tons. This was actually over last year's 24,300. So good sales on pork, maybe giving us a little tone of support, especially after yesterday's down day on the future side here.
How closely do you think the livestock market's going to be watching that report that's going to be out Tuesday when it comes to input costs?
John, I think this is actually a very important point for us, especially on the pork side. We can argue that this drop in feed costs in the past few weeks has brought break-evens down from $63 per hundredweight. Now you're talking 60 to 61, which really makes some of those fourth quarter hogs now actually back to break-even, which is good news. So I think that the livestock side will be watching very closely this report. As it stands right now, they may not get much of a big excitement here for them, especially with these estimates, but it will be something that they've got to pay attention to.
When it comes to the lean hog trade, Rich, what kind of support do we have right now under these levels where we're at, that if we would continue to see a little bit of a precipitous drop, that we'll be able to rest easy and say, okay, we'll come down to those levels and kind of hang in there for a little bit and maybe get us through the tough spot?
And I think you'd argue that on the beef side here, maybe these recent lows, this discussion of this 103, 104 trade on this October and December contract, I think that's a good psychological point. On the pork side, we can probably argue that this $56 price from the December contract just reached recently, I think that's also a good low on this fundamental basis. And heck, for both these markets, we still have questions about the supply waiting for us in this fourth quarter, whether the cattle will still have a couple more weeks of big numbers, and especially on the pork side where we have that seasonal run-up into the month of November, maybe we can argue that anything as far as a change in supply will have a dramatic effect on price.
So do you think we're kind of at a just a balance right now between supply and demand from live to where the consumer wants to be?
I would probably argue a good chunk of that, especially the fact on the pork side, we don't have these hog plants running full speed yet. We don't have this cash hog to wholesale pork price adjustment completely made yet. So I think you made certainly a good point, which is a very reasonable idea here for right now. All
right, very good. Rich Nelson here with us from McHenry, Illinois, with Allendale. Rich, thank you very much. We'll talk to you again real soon.
Sounds great. Thank you.
All right. So that's where we stand so far this morning, Christina, here on a Friday, going into a weekend, a little bit of weather. There is so much to watch, and the trade's going to be crunching a lot of numbers today.
Okay, we look forward to the opening of the market just minutes away
Coming
now.
up.
Thank you so much. Markets editor John Jenkinson.